Hey traders, hope you guys are doing well. I wanted to follow up on yesterday's video where I did some analysis on the customized dollar index, and I wanted to carry on with that today and to give you a different perspective and to show you why I think, having analyzed this, that we are right now potentially going to have some continued dollar strength in the market. And I'm going to show you why I think that and where I think the dollar could go, and then essentially what kind of currency pairs you could be traded to take advantage of that. So guys, today's index, I've actually changed it slightly and I've taken out the yen and the Swiss, which are seen as safe haven currencies, and they can sometimes skew the data. So I've done my analysis based on the five major currencies, so sterling, euro, Aussie, Kiwi and the Canadian. Now you can play around with this, you can add other ones if you wish, but those are the ones that I'm looking at. So what have I got here? Well, firstly, what I'd like to show you is that we are right now sitting at a channel resistance point. Okay, so the market has tested it once and it's testing it again. Now what I've actually plotted here is the inverse of the dollar. So what that basically means is, just in layman's terms, if this price here goes down, that is indicating that the dollar is getting stronger, and if this goes and breaks through here, that's indicating that the dollar is getting weaker. Okay, so just basically think of it as the opposite. So if it goes up, it's dollar weakness. If it goes down, it's dollar strength. Okay, so now that's clear. I just want to show you something here that I have basically picked up, and that is that I was just kind of looking back at my stochastic RSI, and I noticed that this market, this index, likes to create these kind of almost like double tops in the stochastic RSI, as you can see there. And so but what I noticed is that the big move happened on the second of that pattern, so almost like the what creates the double top, right? So the right hand side. But I also noticed that this here, the first time it becomes overbought, that the market does react and fall. But look, you can see here, guys, that again another double top, and here another double top. So it doesn't just kind of go overbought and then come down. It creates this double top and then goes down, double top, then goes down, double top, double top, double top, right? So with that being said, what I wanted to see is that, well, look, if I have a look at this right now, then I could probably say that actually it's probably going to do something similar here, where we possibly grow down, create a double top, and then eventually go down. So the big move might not happen for a little while. However, what I wanted to do is I wanted to check to see what happens when the market hits this area here, right? And whether we get any kind of drop on the first area, right? So that's what I've done. I've basically had a little look, and I've noticed that, look, the market essentially on this go here dropped from here to here. Okay, so it's not a major move, and then eventually, once we created this kind of double top, then eventually the market went much lower. And here again, the first point, the market dropped, but it didn't really properly drop. You can see it took out the high, and it didn't properly drop until we created this double top. So this is certainly something we're going to look out for. But is there any potential move before that double top gets created? So here's another example where we have a drop on the first move, then the double top gets created here, and then the big drop happens. So here's what I've done. I've taken, as you can see here, I've just drawn a little line of what we might get right now. Okay, what we might get. And so what I'm going to do is I'm going to just clone this here right now. So I'm going to clone this, and I am going to take this and move it from high to low right there. And then I'm going to do the same with this, clone it, and I'm going to move it from high to low. And then I'm going to do the same thing right here. Okay, and going to put it right there. Now, I've also got this little one here as well, which I'm going to also do the same thing for. So you can see, clone, and move there. Now, if I just kind of zoom in here, guys, you can kind of see that it's very, very interesting, isn't it? Look at that. Look, the high to low moves with the stochastic in the same position is pretty much exactly the same for these three. And what's interesting, it brings us right into this old resistance that becomes support. So in my opinion right now, guys, I think we should be looking for more dollar strength to come into the market. So what does that mean? It basically means that we should be looking for opportunities to sell the euro, to sell sterling, to sell the Aussie, to sell Kiwi, to sell Swiss, to sell basically the CAD, anything against the dollar. That's what this is indicating. And then if this does indeed come down and it does go here, at this stage we might want to reverse those positions, but bear in mind that we are here, and it could basically mean something like this and then a big drop if the past is going to repeat. Alright guys, I wanted to share that with you. I think that's a little bit different, a little bit of an insight into how to use custom tools. I adjust the tools that I use in order to find hidden information, and that is the art of real high level technical analysis, where you're using things that are showing you to work, and we're spotting these clues. And right now, as it stands, unless we break through here, I would be saying to you guys that I'm going to be expecting some dollar strength in the market, and therefore we should be looking for opportunities to buy the dollar against pretty much any other currency pair that you trade. Okay, that's all from me, guys. Hope you have a good evening. Take care and speak to you soon. Take care.